All right, so I want to start off. This is something that I've probably been spending most of my time on in the last couple of years. Exploring the ecosystems of financial that intersect with ours, because we're at a time when I think everything's changing. Financial services, cap raise, all of it's being disrupted, and there's a lot of things that are intersecting with our space in really exciting ways, and it's going to create an enormous amount of business opportunities. And I've talked about some of it in the emails that I've sent out, but today I kind of want to give you my view and a few of my predictions on where we're going. So let me start with, what does a $1 trillion room look like? This is a room that we put together with this investment bank up in New York. We had Dan, who was the president of the Futures Exchange on the NASDAQ there speaking. We had basically the treasurers and bond desks from, like, name an iconic Wall Street firm, and they were there. Like, it was a ridiculous group. And so it's like, what does a $1 trillion room look like? Dark suits, receding hairlines, and middle age, apparently. But it's about as far from our industry as you could be. It's super institutional, right? Like, it's one of those rooms where I'm like, at that point, I'm like, I can't do a deal in here. It's just, I put it together with them. I helped them kind of organize it. And we were at the bar afterwards with the management team and with the NASDAQ guys, and I think it was Adam Richardson, who tends to go with me on some of these kind of things, who asked, what do you think the AUM in the room was? And I remember the CEO of the bank and the president of the NASDAQ Futures Exchange were like, kind of looked at each other like, 6 trillion? No, yeah, I think 6 trillion, right? Because it's bonds, right? It's like treasuries, it's like that. And I just want to keep that in the back of your mind because the world's changing. Retail investors are on the rise, right? Retail investors, our customers, our prospects, and the ones who aren't yet our prospects, own more of the stock market than ever before in history. 35% of the market is in retail hands. They trade more often. And last year, they traded a lot more often, right? All the major brokers saw a 300% growth in trades. They trade more money per trade. Just year over year, they're up 85% in the dollar value of their trades. Right now, they're on average between 20 to 25% of daily trading volume, and that, again, last year shot up. Taxable investing accounts. That's the non-IRAs. That's people with brokerage accounts that are out there that are not all our customers, but they could be. The most accredited investors in the history of the country. We have 13.6 million. That's 1 in 10 US households are accredited investors. They control $73+ trillion. That's most of the private wealth in the country is in the hands of what are essentially individual investors. And this is why you've been hearing a lot about the rise of retail, but we're really only in the early stages of what is a transformational trend, not just for us, but for the entire financial ecosystem. Because you think about the millennials, right? It's the largest generation in history. They turn 40. The first ones turn 40 this year, right? They are, what? At least 5, like the oldest ones are at least 5 years from their peak investing and trading years. People really start picking up their investing life as they start to get within 15 years of retirement. They're already trading way more than any previous generation, right? So our market has been expanding, and that expansion is going to continue. It's a generational shift. It's a technological shift. It's just this massive disruption of what's changing. And right now, our industry is in a sweet spot because we are one of, not the only, but we are one of the places where you can access these retail investors at scale. And it's just going to expand, right? So the other part of this, and this is something I have to thank Mr. Pizzo, who will be on a couple panels tomorrow. He mentioned this to me not too long ago, that just the subscription industry right now is being predicted to basically double in the next 5 years or more. Go from 650 billion to 1.5 trillion. Right now, we're still a niche industry, right? We are not a huge mainstream industry at this point. But we're going to be. That's the direction that we're going, because the retail investors, when they come out, they're trading, they're doing all these things. The millennial generations, not just them, but even the older generations, are used to now searching for how-to information to solve every problem, right? Like, they're not always looking for the expert first. They're looking to understand what to do before they ever get to the decision-making of finding an expert to actually do something for them. And this is going to have a lot of consequences for us. First of all, like, all the businesses that you have now are going to get bigger, right? The industry is going to grow, and a rising tide lifts all ships. So that means the media businesses are going to get bigger. The publishing businesses are going to have more potential customers. The list size, everything's going to grow. The media spend coming into the space is going to grow. And if you've been around for a while, you know that the whole industry, all these things have already been on an uptrend. We're also going to get a lot more mainstream attention, right? The crypto boom, what was the big headlines, right? James Altucher had, and this wasn't James. I think he got kind of caught in this moment in time when crypto dominated the news. We had that parabolic move. They had just pulled in Jump Media, who presented actually about the campaign that they did that was using some new of their ad tech to really drive what was essentially a crazy-looking space ad all over the internet. So you had James's face with like these gold Bitcoin symbols for eyes and like just all this stuff, and it was everywhere. And it was a huge campaign. But there were also a lot of ICO scams at the time. Anything related to crypto started to have a bad name when it crashed, and James got a lot of bad press, right? Because the marketing was too effective. And I remember talking to a lot of the marketing managers around that, and it's like, man, we're getting punished for being good at what we do. You ended up having, what was it, The Atlantic did articles about the company, right? They started giving a lot more attention. That was probably one of the first times in my career in the industry, which goes back to about 2005, that there was any type of mainstream articles written about anybody in our space, right? That's going to continue. It's absolutely going to continue. We're going to see a lot more people who are looking at our space because a lot more people are coming into our space. And that's good and it's bad. It can be either. It's a very agnostic thing. It's going to be great because at some point there's going to be a tipping point, right? We are still a niche industry, and part of that mainstreaming is because there's a lot of people right now who, it's kind of weird to go buy investment stock pick advice, right? They don't do that. The people who do that are really kind of dedicated, self-directed investors. A lot of the other self-directed investors are actually just choosing which mutual funds or ETFs they're going to put their money into. But at some point, as the idea of subscribing to trading services and education becomes more and more talked about, more and more seen, it's going to be more normalized. And people are going to know about it more. And whenever the market has crashed, our industry has grown. Does anyone else notice that? And why does that happen? People lose a bunch of money. A lot of the editors and trading services get killed in the short term. Their portfolios look awful, just like everybody else's. But the industry grows because all of a sudden, everybody's paying more attention. And more attention is more subscribers. People are also feeling after a crash that what they're doing didn't obviously work. And they didn't know enough, and they're looking for guidance. And so I think that the next big catalyst for the industry is going to happen whenever we have the next big, like real serious downturn. That's probably going to be a huge tipping point that's going to really explode the customer base that we have. So everything's going to go up, right? As that happens and as we mainstream more, you're going to definitely see, like I said, bigger revenue, bigger opportunities, but we're going to see new types of competitors. We're going to see new product and marketing formats. We're going to see also, as audiences expand, you're going to see more niching down. And so what happens is right now you have an audience, take day traders. On a relative basis, it's not a huge customer base. But if you look at Charles Schwab and Fidelity's accounts, the 10% of their population of brokerage accounts that basically qualify as day traders are responsible for about 50% of their actual trades. So they're super, super active. And we know, like, in an investment newsletter business, you're looking at something in the neighborhood, depending on which one and at what time, a lifetime value that's in the hundreds usually over a scaled business. In a niche down day trading business, I've seen lifetime values as high as 18, 19,000. And then I talk to them, and they're using the phrase lifetime value to mean 12-month value because they just stopped marketing to them after that, which was insane. So you have these little niche groups of traders that you're not going to scale the volume of, but you have this huge value per customer. As the market itself expands, all of those kind of sub-niches of traders and investors are going to get big enough that people will start to compete for that space. And so you're going to have this, like, kind of the balloon of the industry grows, and you're going to see increasing kind of niching down of product and marketing and content types. So we know a little bit about this because it's interesting, Andrew, that you mentioned, like, the whole I had no idea who Agora was, because when Jamie and I started the first conference, we very intentionally, we had this conversation. We're like, we're in this weird spot where, because I worked under, like, Clayton, who Clayton Makepeace was my mentor. He brought me into the business. I was his first in-house copywriter. My wife and I moved to North Carolina to work underneath him in-house. And he was obviously a classic kind of direct mail writer. Worked with Weiss, who's one of our sponsors, and I had a great conversation with Martin that we're going to share in the app. But I knew that whole newsletter world very well from working under him. But when I went out on my own, I started working with all these small trader educators. And Tony Flores, who is here, who I haven't seen in forever, a lot of that, those of you who go back in the industry, you remember, like, Clayton had all this amazing content and courses, and most of that was actually created by Tony. He and I worked together at Clayton's agency back then. And actually, Tony, I don't know if you know this or not, but you got me my first trader education client, and that really affected the direction of my career. And so, thank you. But what we ended up doing was taking that world, who had no idea what the Agora world was doing. They had no idea about, like, the copy pieces that were going out in the long form, and they had all this other stuff that they didn't know, and smashed it together with the newsletter world. And it was really interesting because this was 2015. Those of you who are huge in the internet marketing space or have been around long enough, like me, remember in 2001 was the first product launch, right? That was John Reese's Traffic Secrets. 2015, Agora wasn't doing those models. That was not their promotional model. I remember having conversations with different publishers, and they're like, that's too many emails to send for a single promotion, right? Because it's a multi-day, a week to 10 days or 2 weeks kind of process. But that's all we were doing in the trader education side. The affiliate launches, that's how Jamie and I met. She was the affiliate manager. I was writing copy, and she was killing it. We sold tens of millions of dollars for different clients. And we saw that the two worlds just didn't meet. They didn't talk. They didn't understand each other. There was so much opportunity. And so when we started the first conference, that was the conception. We're going to just throw everybody in the room together and see what happens. And a lot of things have changed since then. And it's not because of that, but it's that combined with the growth in the market. Because in the very first presentation at the very first conference, I went back and checked my presentation because I was like, I'm pretty sure I talked about this. I talked about the fact that our industry is growing and that the retail and self-directed investor market is exploding. And we said there was a boom market coming in the industry. And look at what's changed. Back then, like a $5 to $10 million promo was huge. And I know this because I had, in the trader side, I had an $11.5 million promo. And when I would come over to the Agora side and talk to them, everyone was like, hell yeah, let's promote, because the biggest one we've ever seen is maybe 14 million at the time. Now, I mean, I could name probably a dozen $25 to $30 million promos that we've had in the last 10 years, right? 8 years, whatever. The market's grown, the industry's grown, the promos have gotten bigger. Back then, Dittman, you were talking about this the other night, we were looking at Stansberry, like they're roughly around 100 million. It was huge. Even the other Agora groups were like, damn, that's huge, right? Most of them were like 30, 40 million. Now we've seen 300, some got up and down. We've also seen, like, if you look at the Beacon Street group, they've had, what, $500 million. We've seen this growth in the size of the publishers. Like Andrew said, the worlds didn't talk, but now it's almost inconceivable to think that there is a trader education industry that is separate from the newsletter industry, right? It's merged together. We have all this kind of movement back and forth with staff. There's cross-marketing. There's just an enormous amount of opportunities. The product types, the promotional types, that back-end product launch model became the standard product launch model. Back when Angel Suarez was one of the guys who actually came to our first event, and I remember him right after that doing a big launch for one of his clients and then another one for AF, and it really exploded. And I know there's other people who were doing it, but around that period of time is when that model really just grew and it became the standard back-end model, which is probably responsible for billions in sales over the course of the last 5, 6 years. But it was something that the trader educators, guys like Andrew, and a lot of the other people there's actually quite a few in the room that were there, that was their standard promotional model, right? Getting affiliates to promote required that. There were also a heck of a lot fewer media companies. There were a lot fewer places you can go rent a list. There was a lot fewer people who really understood kind of sophisticated media buying on networks. And now we have so many just A-list media buyers and media networks here in the room that there's a lot of companies that didn't exist back then. And those it's not like companies then went out of business, it's just they weren't there. So that part of the industry has really grown. And a lot of you have grown with us as this event has grown. I know we've been fortunate enough to be involved in kind of connecting a lot of people and people getting the business. A lot of people say they get more biz dev here in a couple days than they do all year otherwise because, again, it's one of the few places you can get together as an industry. But I fundamentally and just with every fiber of my being believe that the next few things that merge with our industry are going to create just more business opportunities than we've ever thought possible. I mean, we're talking about, I debated like 1,000x value might be too small. There's so much happening and so many things coming that it's going to be a transformational period for the next, I'd say, 5 to 10 years. I think our opportunity is going to be smaller. It's going to be 3 to 5 years before some big things change. So with that in mind, I want to step back and again talk like on a meta level for this business or our industry. What's our highest level skill and highest level kind of value? It's not buying media. It's not creating content. It's not marketing funnels. It's not writing promotions or copy, right? Those are all things that we do. There's things that we monetize. But really, if you think about what we actually do, our superpower is finding and engaging and aggregating and then monetizing investor attention, right? Our business is grabbing investor awareness and converting it into a decision to invest or buy something, right? That's what we fundamentally do. And if you look at our industry from that perspective, then you start to realize some things. And so I want to talk about these. I've talked about these guys in the newsletter a few times, and it's such a wonderful story. Jeff and Steve, they went to a newsletter editor who basically wanted a side hustle several years back. And he had access, he had permission to mail his list and free email list. They went to 100K free opt-ins, and they raised $500 million for a money management firm. Think about that, right? This is what they had, 650 investors. They actually started with an average AUM of about 100,000, moved it to 800,000, got a very substantial AUM, started out of, pretty fast. And the numbers are really interesting, right? Because on a back-end subscription product, your revenue or your renewals are really low, right? I mean, everyone knows that. Like, you don't get renewals at 90%. You're getting them at like 20 to 30% if you're lucky, if you're charging, especially if you're charging $8,000, right? But that's the annual fee on that, and the renewal rate on a money management business is about 90%. People stay. So I'm going to ask you, like, what's your list or traffic worth? And how do you conceive of valuing that asset? Is it lifetime value of your subscription base? Is it your ad revenue? Is it some combination of the both because you do both? The average self-directed investor in the United States has $267,000 and change in capital. This is just the average self-identified self-directed investor. If that's who your list is made of, what's the investable capital that your list actually represents? Like, there's people in here with well more than 5 million names. Like, you're an access point for investors, retail investors in particular. That's an enormous amount of money. So when I ask you, like, what's your list worth, that really depends, right? It depends on what you're doing with it. And so when I asked before, like, what does a $1 trillion room look like those guys in that room, they didn't own that $1 trillion. They were part of a decision-making process that basically marketed ideas and made decisions about other people's money. It's kind of what you do. So, like, what does a $1 trillion room look like? Maybe it looks like this, right? Just maybe it looks like this when you're talking about retail. So if our superpower is engaging investors, the editor, the person who the customer has put money down, not just once, but 2 times, 3 times, in some cases 5 times, to get their advice, to get their investing opinion, is going to be what? How many people in their life do you think they actually take financial, I don't want to say advice because it's not advice, because it's not very specific, that's a very legal term, but who have an influence on their financial decision making? Is it 3 people? Is there 5 people? I don't think there's 5 people. There's not 5 people in my life that I'm like, when they tell me to do something with my money, I'm 100% going to do it, or even 50% going to do it. So there's a very small number of people in anybody's life who actually has an impact on their financial decision making. And your best customers, that's what your guru is to them. And so the big point that I want to make on this part is that subscriptions and courses, advertising revenue, these are monetization models. These are ways to monetize the attention that you've already gathered. They're not the only one. And I'm not saying that the other ones are better or worse. What I'm just trying to do is expand the way everyone's thinking about the space because other people are thinking about the space in a different way than we are. And they are intersecting with our space all over the place. It's kind of like one of those things where the genie's out of the bottle, you can't put it back in. And so my prediction is that we're going to see within this industry an evolution, right? So back in the 80s, there was a very famous, now famous CEO of Coca-Cola, right? Robert Goizeta. And the reason he's famous is because when he took over, Coca-Cola's market cap was like 4 billion, 5 billion. And when he was done, it was 145 or 150 billion. And he had this very big strategic marketing approach. And what he said is, we are missing the boat. We fundamentally misunderstand what we do. Our job is not to get a greater share of the soda market. We should be thinking about getting a greater share of stomach. They started adding other product lines. They started monetizing in different ways. They started adding waters and other drinks, and they started adding foods and other things like that, right? So they changed the way that they viewed what they did. They basically had people who are getting refreshment. They looked at their customer base and said, our people, they're getting refreshments, they're getting snacks. That's the people, that's what they do. We are already able to access them. And so a different way to think about what we do is share of capital. There's a lot of people right now who are circling the industry, looking to get access to you guys in order to access that share of capital. And some of them are good and some of them are not. It's a whole complex conversation. There's been some horror stories and there's been some huge wins. And we can talk about that in the Q&A or later. But I fundamentally believe, and this is Safi. Whoa, there's a problem on my slide. Awesome. Sorry. The guy behind the random graphic that has nothing to do with the slide is Safi Bahcall, who a friend of Jamie's now, actually, who wrote a wonderful book called Loonshots. And it's about a lot of things, R&D, and it's a different approach. But he had this really great point of there's different competitive models. There's product innovation, and then there's strategic innovation. And at different times in an industry's life cycle, you'll see product innovation starts it, and everybody expands it, and then eventually it changes to a strategy innovation. And so a great example of that would be kind of he uses the airlines, and he talks about how people were trying to improve the quality of the plane. And then one of the airlines, and I forget if it was United or American, came up with a strategy innovation called a loyalty program. And they beat the crap out of everybody who were still competing on a product basis. And so I fundamentally believe that what we're going to see now is an evolution of strategies, monetization strategies, revenue strategies, different ways to approach this engaged investor. And that's where competition is going to move, I think. We're going to see a lot more competition based on what's your actual monetization model. And so I think of this in two buckets, right? There's going to be people and opportunities that are focused on how do you connect with the retail audience. And then there's going to be people and opportunities and business opportunities that are based on how do you leverage our skill set of aggregating and engaging investor audiences. So let's just look at cap raise. We put a bunch of events together. We have before pre-pandemic times, we were doing probably 8 to 10 a year of various types that we don't always publicize. And this was at one. And Tommy there he's Paul Tudor Jones' neighbor. We managed a couple billion for him. He came to one of our events for random reasons. But it's really interesting that they're coming because of who we are in the publishing space. So you have these private markets. Let's just look at that right now. And I'm sure a lot of you already know this, but we had some big changes regulatorily speaking, right? You had the crowdfunding change to going from 1 million, being able to raise that to 5 million, and then you had the Reg A and the Reg A Plus, where now you can go out to non-accredited investors and raise up to $75 million. And there's some big chunk of that money that can actually be used to fund marketing the raise too. And this really had a huge impact on a lot of things. And to put it in context, this is where the other slide is supposed to be. The average raise this is one of the best VC ecosystems out there. And just the average, and obviously there's outliers and everything, but the average first raise out of that is about $1 million, right? Look at the Series A's on average here. The biggest ones over there, the 20 plus, there's some that are over 75 million, of course, but the vast majority of these Series A rounds in the VC world fit within a Reg A model. A lot of them fit within a crowdfunding model. And this is getting a ton of attention in a ton of places. People are circling. And so these two guys, so Doug, I'm talking to this guy, Doug Chupek there. He raised, I think it ended up being about $18 million on a Reg A. And I've heard 5 or 6 people talk about how they are the one who made this connection with, I think it was a Legacy who featured them. And I'm sure, and everyone's taking credit for it. I'm not taking credit for it. I'm talking to him after he did it. He came to one of our other events. But the reason everyone was taking credit for it is because a lot of people are going out and marketing themselves as, I have this secret newsletter connection. And if you pay me a lot of money, I will give you this introduction. Fabian, Gage Cannabis, they did a raise, and a good chunk of it came from a recommendation in a newsletter. I do know how that one happened, and it was a longer process because I was there when the whole kind of early conversations happened about them and the editor and the marketing team. But he's a part of one of our other business networks now, and these are two of the bigger, I'd say, Reg A wins that are being marketed out there by a lot of different people. And it's really interesting because in this world of retail investor raises, the investment banks are not the ones bringing the investors. And so in the US, you're seeing this now. The bigger I'd say the top 3 banks that are underwriting Reg A raises have seen their commissions go from 6-7% down to 1% because they're not bringing the investors. Who is? The newsletters and the marketers who are covering it. So Marin Katusa, and I don't know what happened to my slides because they're, anyway. That's supposed to be a picture of Sway on the other side. They're a member of our accelerator group. Marin, back in 2005, came up with the first private placement newsletter. And the reason that he did it was and he's in Canada, he's under different regulatory rules than we are in the US. He wanted to have more negotiating power to invest in deals. So people in his newsletters go in with him. He doesn't go in first. He negotiates the terms. And he's raised now on individual deals up well over $90 million. And not just once, he's done 50, 60. It's like this funny thing, like every time they do another announcement, I get another email from, there's MK, Marin Katusa, and Marin Svornik, his partner, so it's MK and MS, or Sway. And I get an email, John, we just broke another record. Like, John, we just broke another record. And it seems like every single time they do it, they just broke another record, and you're looking at the raises, and it's ridiculous. But here's the crazy thing. So they find the company, they negotiate the deals, right? They set the terms. I think it was like 2/3 of the warrant market in Canada are from deals that Marin has put together. It's some ridiculous number. He brings the investors. And then the investment bank takes 7% for filing the paperwork. Like, it's not going to be sustainable on the banking side. And that's why in the US we're seeing those commissions just dropping. And this is important. And it's important because what it means is that the capital raise world interacting with the publishing world is destroying investment bank commission structure. It's changing their revenue and business model. Like, think about that. Like, that is not something that you would have expected, right? This is like a huge disruption. And the weird thing is a lot of the people taking credit for all of these things, the raises, the success of the raises, are these outside platforms where you have to be on a platform somewhere, right, to get investors. They won't feature you in the front page and in their prime thing until you've already raised like maybe 500,000. Or you have a publishing partner. And that's what I mean. Everybody's taking credit for these raises. It's because they had somebody, and I think the first one, I don't know if it was intentional or not, but publishers are publishers. They're not involved. They're not taking commissions. They're not getting paid. And if you are getting paid and you're not a broker-dealer, then you are breaking the law. And nobody in the publishing space that I know who is in these private market spaces is at all interested in that. But they have sold a lot of people that they spent millions and millions of dollars on to acquire a product that requires them to go invest in a private market deal. So they tell their people, like, we will only cover you if you go on a platform. And here's a few you could choose from that we go to a lot. And then they go to those platforms, and then they send the customers that they spent millions of dollars on for free to that platform. And that platform now knows, I have this super highly qualified customer. We know he buys newsletters. We know he buys private market newsletters. And we know that he's interested in investing in deals. And we didn't pay $1 to market it, right? And what are they doing? They're going out and raising money from other VCs because look at what we can do. You feature on our platform, you raise $50 million from newsletters. And there's some other crazy things that happened too, like in terms of another publisher having a VC fund who then went underneath and bought a huge chunk of one of those groups, which is another story. But the reason that it's interesting to me is, and this is not at all a criticism of the publishers who are doing this because you're publishing models, right? And often the people who are running these things, they're not the person who's going to go out and start a bunch of other businesses. They have a business that they're running, and I'm not saying that they should go out and start a platform. But it's really interesting to me that our effort, our work, the value of that work that we're taking on these guys are taking on a subscription basis. They're building these audiences, they're engaging them, they're really putting a lot of analysis into this, they're vetting companies, they're doing all this work, and then they're sending the value over to somebody else for free who is gonna get a big exit. Like, they're gonna get big exits. But they would not succeed, they would barely exist without these relationships. And people are not looking at the bigger picture of the industry. And this is just a perfect example of that there's enormous amounts of opportunities. And that's just going to be annoying. Sorry, the slides are what they are at this point, I suppose. Venture capital is starting to compete for our customers. So Jason Kalkanis, these are Facebook ads. He's not selling a subscription. So he's in the US. He's doing the exact same thing that Marin is doing, right? But because he's under a different regulatory structure, he's not selling a subscription and then getting you into the deals. He's basically saying, come join our syndicate or invest in our fund. And they're raising a lot of money. And they're marketing and advertising in the same channels that we are. This is a very early example of something that's going to become much more prevalent. So let's talk about public markets real quick. Sorry, so choose your path to public, the direct listings on the NYSE. Companies are going and they're taking responsibility for their own capital raise, right? Goldman Sachs, if you go to their website right now, go click on the Insights tab and go look at what they have there. There is a whole section called the Rise of the Retail Investor, or Rise of Retail Investing. And it's not like, here's one article. This is an ongoing conversation among different top execs from Goldman around the influence and power and importance of the retail investor. This is not a small trend. Yeah. And so this is what, like, another one of my predictions. This direct-to-investor kind of campaign, this is going to become standard operating procedure. We're seeing a lot of early signs of it now, but the fact that there's direct listings, the fact that everyone's talking retail, the fact that everyone is talking digital distribution to investors, like direct to investor is about to be, it's just another huge, it's growth. The growth of that is massive. And so we have had like a lot of the really like kind of small cap space has known this for a while because back the E-Trades of the world had killed kind of those boiler rooms of people who would kind of hit the phones to their clients. And so they've had to deal with like, how do I actually reach investors when a big analyst won't cover me? And so they've always been kind of like looking to the space, and there's a lot of like good stuff and a lot of horrific stuff that comes out of that. In our industry, the phrase investor relations means the first thing that you think of is pump and dump, right? Because a lot of the worst part of that industry came in for so long and would try and basically just get their stuff in front of your lists. And so it has a very bad name, but like that phrase investor relations, like Goldman Sachs has an investor relations department. Like there's a mainstream version of that too. And this is what's interesting is I think that this direct to investor kind of component of investor relations is just going to become a much bigger and bigger and bigger piece of the pie, which then means a bigger and bigger piece of ad spend and media spend and new business models and all kinds of new revenue models are going to be coming out of that. And so we're going to have this growing sophistication of performance marketers, publisher and content marketers, and just all of their media and advertising spend. They're just increasingly sophisticated. And so how do people in those markets see our industry? Because I've talked to a lot of them. And I've talked to them both, I've talked to the shady dudes, I've talked to kind of people in the middle, I've talked to individual companies, I've talked to exchanges like the NASDAQ, I've talked to people, I talked to Vince, who was one of the guys who actually helped make the Jobs Act happen, right? And there's this idea of democratization of investing, or of financial markets, and they look at our space and they say, this is retail distribution, right? It's not the only source of retail distribution, but when it comes to online marketing, we're probably one of the only ones who really pushed online marketing for retail distribution. Whereas a lot of the other retail distribution kind of models are things like, well, if you're going to raise a huge fund, right, and you need to get retail money, you don't do direct to investor, you'd go to corporations and you say, we have this fund, you should make your 401k program our 401k program, we'll help you. And that's a huge distribution model if you're going after trillions of dollars. But when it comes to digital marketing for investors, it's a very young industry for a lot of people. And we're the ones who figured it out already. And so that's why they're coming and looking at this space. And so now I'm going to just switch real quick because I've got to finish up, I know. The rise of institutional influencers in media and publishers is, I think, another huge trend. The guy right behind in the middle, Jawad, like he's a guy he ran an event called Oasis out in Dubai. He has a newsletter, but it's targeted to institutional folks. And then he does, like just last week again, he has the most interesting dinner in the world, he calls it. And he had like Stevie Cohen on interview, and he has those kind of guys all coming to his events. And he's using essentially a simplistic version of a publishing model, a newsletter, a note with events. And he's getting access to and attention from, I mean, the long list of big names in the hedge fund world that come to his events is pretty much the name, you name it, they're probably there in some form or another. So set the retail investor aside for a few minutes and think back to our superpower, the actual ability of understanding how to engage investors, how to find them digitally, how to like buy the ads, do all of that work, but also how to write content around investment ideas, how to create publishing worldviews, right? Have a franchise that has a perspective, has an opinion, not news, but has an opinion about investing. And then remember this when Carl Icahn tweeted a couple times and raised market cap of Apple 17 billion? This was a while back, right? He's a guru to institutional money, to big money, right? They follow him. Everybody looks up to someone. And this was very, very, so the slides are driving me nuts, sorry. I don't know what happened when that picture has nothing to do with the story. So I was sitting, I had the good fortune to go to China with some people, and I ended up in this weird space where I'm sitting at a table with, like we had the governor of the province Shanghai is in, we had a bunch of executives from the CIC, the Chinese Sovereign Wealth Fund, sitting there. And this was a little bit after, this was 2010. And the Sovereign Wealth Fund folks are like, okay, so they asked me and the guy that I came with, like, we just offered Goldman Sachs $10 billion if they would give us Warren Buffett's terms that they gave him, and they said no. So we're thinking about putting more money back into Goldman. I think they put like $4 or $5 billion into Morgan. And they were asking, because my friend was a really, really well-respected analyst to them, is Morgan Stanley as good as Goldman Sachs? And they asked me too, and because I think they didn't understand the phrase copywriter after financial. And of course I just gave them my opinion, but the thing that was fascinating about that is they were trying to copy his trade. They're trying to do what your customers are doing. They want to copy your trade. They look up to somebody and they can be influenced. That level of money can be influenced just like every other area of money. And so that picture there, man. Well, that's supposed to be Raul, who spoke down below, from Real Vision, who really interesting guy. Like Real Vision is a very interesting business for a lot of reasons. But more interesting to me is that Raul, and I know Raul because I spent a week in the Caymans with him, 6 months in a row, and then a week in New York, helping him with a bunch of stuff. He had written a paper on comparing gold to Bitcoin, or Bitcoin to gold. And it went viral among a lot of institutional people because he was kind of riding the claim to fame of helping Kyle Bass navigate 2008, right? Because he had his macro newsletter. And that was a big tipping point, right? It was part of what moved a lot of people's thought processes into, well, this is a real thing. This is something I can understand. Crypto was this newer kind of weird thing, and he equated it to gold. And now that frame of Bitcoin is still used very, very, pretty much everywhere, right? So Kathy Wood, ARK Invest, they've got $52 billion under management, and they're posting content on YouTube all the time. They do a lot of content. They do a lot of marketing. One of the owners of the group is a marketing group. This is not a small thing. Go back to Kalkanis, the podcast All In, right? These guys are really good at building audience for themselves. And why are they taking the time? These are really great angel investors, VCs. Like, they know what they're doing. Why are they taking the time to do a podcast? Why are they taking the time to market and raise money from retail? They're building a couple things. They're building deal flow, and they're raising capital, and they are building a positioning that they have this reach, right? It's building their business. And that's what I mean, like this rise of influencers messing with the kind of the skill sets and things that we do is gonna be targeting all areas of financial. And so I predict that the B2B Finpub space and influencer space is 100% on the rise. We're seeing this already. We're seeing people targeting RIAs with publishing asset. We're seeing people starting to become influencers towards family office groups. In every level of institutional capital, you're gonna see, and my prediction is that you're gonna see influencers, you're gonna see media properties, you're gonna see gurus coming up to influence that space. Because all the biz dev functions, right? All the deal-making functions in the financial ecosystem are integrating with content and media models because thought leadership, positioning of individuals, how people position themselves within their community is very media-driven anymore. And so we're gonna see a lot of this all over the place. This is gonna be an explosive growth area. And this is an area that needs our skill sets. They don't need our audience. And so that's a difference. So for the marketers, for the people who are doing list management and all those kind of things, this is a whole new sector of the business that's gonna open up. And yeah, we're just see an explosion of this. I fundamentally believe this is true, that you think about like the career development of millennials, they're hitting their 40s. When they start to go out on their own, you're gonna have all these people with all this experience kind of leading out there. How would I go out and make a name for myself? They're gonna go to media because that's the model. So I'm gonna skip through here, and I might just skip some of these slides because the one that skipped just now is how important the connection between media and publishing is compared to a subscription model versus another monetization model. So just real quick, because I'm over, the Tasty Trade sold for what, $1 billion, 700 in shares, 300 in cash. Investors Business Daily just sold for $275 million to News Corp. Both had basically the same audience, very active traders. Investors Business Daily had substantially more of them, right? They had tens of millions, like over 10 million uniques a month. They had 100,000 subscriptions. Tasty Trade had 100,000, 105,000 trading accounts. If you look at that as that competition between strategy models, you had somebody doing trader education, tying it to a financial brokerage account, to an actual brokerage account, versus someone who's doing media for subscriptions. And look at the valuation difference, right? One had the much bigger audience, basically the same audience, but it's a different revenue model, different strategy model, and that's more valuable. And so this, real quick, this piece of SPACs and M&As, and we have Scott Cohen, who's gonna be joining us on the panel in a few minutes, who he's led hundreds of cap raises. He knows this space in and out, and he's gonna come give us his perspective kind of on our industry from that side of the world. And I do think that Tasty Trade example, like this is gonna be the thing, like connecting media and publishing assets and aggregating investors and tying them to technology models, fintech models, brokerages. That's where all the biggest exits are gonna happen. But we're gonna see a lot more exits in this space, right? So Beacon Street, which is becoming MarketWise, they did their $3 billion SPAC. We'll see if they're closing soon. They're rebranding to MarketWise, right? And if it's not in there now, we'll have it posted today. Marco was supposed to be here, but then his daughter's 6th grade graduation ended up being today. And he's like, I can't miss that. And I'm like, yeah, you can't miss that. So we did a video conversation. It's in the app. We talked a lot about what kind of acquisitions they're looking to do, what kind of strategic partnerships they're looking to do. And I told him that since you can't make it, like, I'm happy to refer people over to him. I know what he's looking for. We talked a lot about it. If you listen to the video, you'll see kind of what they're looking for, a little bit of it. And then this, I just saw this morning, so I had to just throw it in here, which is probably why I messed up all my slides. Grant is one of our accelerator members. He came in, and I just saw this news piece that they're looking to possibly doing a direct listing. He couldn't be here. I talked to him last week or the week before. He's usually always here. And it's really interesting. Like, this is going to be a trend. This is what you're going to see. And the thing about that is the really big money's coming. It's coming. And I remember a few years back, there was an IM guru, I guess 10 years back around '05, who was talking about the big money's coming to internet marketing, and he meant the Agoras of the world. I'm saying that the really big money is coming. I mean like the Goldmans of the world. The rise of the retail investor is a fundamental shift in the industry, not our industry, but the financial industry, and they know it, and they have the money to spend, and they're looking at the space, and they're gonna spend it. And so everyone can buy, build, or borrow, right? They can build it themselves, they can buy somebody who's doing something, or they can do a strategic partnership. But I think this idea of capitalizing your company, it's just gonna become more common. It's gonna become more important. The competitive environment's gonna change. The amount of money you're spending, all of it's gonna change. And so this is gonna become a very key piece. And I know this because Jamie is smirking at me here because, and we can't announce this name yet, but we've done a deal with, on our revenue side of the business, where Jamie's the CEO of Revenue Tree, Digify AI, like a whole, we'll talk about that later. We did a deal with, and Jamie did it. So when I say we, I mean I'm Jamie's partner and she did it. Struck a deal with what is, last time I checked their valuation, they were a $9 billion company. And this wasn't like a deal with like their low-level marketing manager. This was a presentation that went to the board. And we've signed contracts, we have a deal, we'll be announcing it in the near future. The big money's coming, the big deals are coming, and we know this because we're trying to lead the way for not just us, but for all of you. And that's where we're at, right? We have these ecosystems. Financial Marketing Summit, everybody knows. The Revenue Tree side is leading the charge in building strategic assets in the performance marketing world at scale. And we're talking about like at the scale in the hundreds of thousands of customers and merchants and clients and performance marketers. The Pendry Cannon side, I'm leading the charge on penetrating and expanding our networks and relationships and opportunities throughout the financial ecosystem. And the reason for that is kind of two wings of the bird. The Financial Marketing Summit, you guys, this room, our accelerator, is at the center of gravity of those strategic assets and ecosystems, because the only reason they exist for us is to kind of funnel deal flow into this industry. Right? We have really, like, we see our business as we're meta thinkers on the industry. The healthier our ecosystem is, the better Jamie and I do, right? So for us, expanding your opportunities and business opportunities and bringing more money into the space, that just makes everything better for us. It makes everything better for you. And so we are really good at building strategic assets and penetrating new networks and expanding those networks and bringing them into kind of a deal-making conversation with our industry. And now we're doing that at scale. You're gonna be hearing a lot more about this in the next 6 to 8 months. Like I said, we've been doing events all over outside of this. And so we're bringing a lot of this stuff in. And I'm like about 10 minutes over, so I'll cut it off because it's just with this warning that like, not everybody who's gonna be coming into the space is an honest actor. And we know this because we've seen a lot of really shady things. We've seen people trying to bribe employees of publishers to cover their company, which it would then not be disclosed because the company didn't know that they took compensation. That is at best a fine, and it could get you into criminal territory. There's actually a case being brought against somebody right now who did take money and didn't disclose it for recommendations. We've seen that before. Somebody's gone to jail years and years and years ago. There is a lot of things happening, and you need to be careful because not everybody's looking out for your best interest. And so if you're going to start doing deals in a new way, in a new area, you need to start to get some real advice. If you need an SEC lawyer, I mean, we have them, we know them. If you need whatever deal you're doing, we probably know somebody who's done it, and we can give you some connections to somebody who's explored it because it's going to be a Wild West for a while. We're seeing a change in the regulatory environment just from that mainstreaming effect. We talk about that with Martin. Tomorrow, Damon Wright is going to talk about it. I did a wonderful interview with Jeff Bishop actually yesterday. We'll see if his lawyers let us send the recording out, talking about his case. The FTC coming in is a new thing. And so everyone needs to be aware that things are changing on every level, including the regulatory level. But that's it for me. Sorry I went over. And rather than questions, we're going to actually jump into a Q&A, a discussion panel kind of on these changes faces or changing opportunities in the space. And so we can, if you have any questions, we can do it there.